Welcome to another edition of Loan Officer Reacts. I'm Brian McIntosh. I'm a licensed loan officer. Want to share a few thoughts on what's going on with market conditions right now. This is a great, hopefully, a great educational or a great resource for you. If you, regardless of where you are, who you are, right? If you're a professional in the real estate industry, or if you're looking to buy, or if you're just wanting to know what's going on, hopefully, I can pull back the curtain, give you a little bit of insight on what's going on. And I'm never going to be that person whoever's going to say, I know it all, I can predict the future. And this is not to predict the future. So this is more about getting understanding what's happening right now and what this could mean for the future, what this could mean also for today. So let's dive in and let's talk about what's going on. First things first, I'm having a little deja vu right now because this feels eerily similar to what has happened last year, 2024, almost at this exact same time. If we rewind and go back to last year, rates were moving down starting in the middle of the summer, and they slowly worked their way down all the way into September till we got to uh, almost 6% flat. By the way, when I talk about interest rates, I'm going to pull this from Mortgage News Daily. So if you're looking at the right side of my screen, you see where it says rates up from 6.125 to 6.375, and it's got in there MND. That's Mortgage News Daily. Now, those numbers could have changed since this video was posted. So don't beat me up too much on that there. But Mortgage News Daily is one of my favorite resources for interest rates. Going back to a story, what happened last year, rates were moving down, going into the Fed rate cut in September last year. And after that rate cut, we saw rates go up. Now, I've heard that a lot. Hey, Fed rate cut doesn't really mean anything at the time of the rate cut. It does mean something, right? But one of the terms that you'll hear a lot when we talk about the Fed and mortgage rates is going to be a term called baked in, meaning the rates are already reflecting a Fed rate cut. And that's what we saw last year. It's what we saw this year, where rates are moving down in anticipation of the rate cut happening. But when the rates went back up last year, there wasn't a whole lot. Now, there's a lot of people out there who know why rates went back up. Problem is a lot of times those people aren't the loudest at telling the world what happened. And what happened in that case was we saw unemployment go back down. JOLTS reports also showed a stronger labor market. Big drivers there. Obviously, inflation is another driver. Shouldn't say obviously, but it was a big driver. And that's really where all this started, goes back to inflation, but it's now turned into something much bigger. Lots of pieces here that are a part of this puzzle that are factors in how interest rates move. But last year we had the combination of inflation started plateauing instead of going down. We saw the labor market strengthen rather quickly, and that caused rates to go back up because that meant a pause on those rate cuts, and that's exactly what happened. We ended up getting a pause on the rate cuts. Obviously, we got a rate cut last week. That's pretty obvious because that was on the news. But what's going to happen here, right? We had the rate cut last week. Rates have now jumped up roughly a quarter of a point, if not a little bit more. And the question is, why did that happen? We can still point back to the same things. Inflation still kind of leveled out. We're hanging around that 3% mark. Now, there's a couple of inflation numbers that we could talk about. We got headline inflation, and that's just going to be the overall inflation, usually what a lot of people talk about. And then we've got core inflation that takes out food and that's going to take out energy, meaning those are extremely volatile aspects of inflation that the Fed really can't control. Not that the Fed can control anything, but one of the biggest levers that the Fed pulls is obviously, we talk about this a lot. It's going to be the Fed funds rate. When we talk about their rates and what they're cutting and when they're hiking, those have a lot of influence on inflation. But you take out food and energy, and you have the core 2.9%. So inflation really seemed to have stalled out. The goal is 2%. We're still a long way away from that happening. So, what are other elements that Wall Street's looking at? Because they are a big driver, the primary driver, if you will, of how interest rates move. And that's going to be our labor market. We've been seeing some signs, but we've also been seeing signs of labor market weakness for the past few years. But some recent reports really were echoing some weakness in the labor market. Well, over the past couple of weeks, we've got some reports that show maybe that's not as true as we thought. So we've seen rates move back up. Why? Maybe we won't get as many rate cuts in the near future as anticipated maybe 3 or 4 weeks ago. Stronger retail sales is another one. Consumer spending. If consumers, us as consumers, are spending more money, well, that means inflation's not really going to be going down. If we saw a big decrease in consumer sales, we would probably could anticipate a lower inflation number. So looking into next week, well, it's going to be really telling on what's going to be our path for the next few months because like last year, we had JOLTS, which is a job. It's a labor market or a labor report, a jobs report. There's the word I'm looking for, and there's different aspects to it: openings, layoffs, turnover, things like that. We're also going to get unemployment as well. So it's going to echo what happened last year. Those are going to be big market movers, along with manufacturing inflation. So finding out what the prices are for manufacturers that has a role in prices, right, which goes into inflation. And jobless claims, we get those every week, but those still are market movers. So depending on what happens next week, really is going to play a major role in what happens in mortgage rates, whether it's going to go up or go down. So hold on there, pay attention to what's happening to the report. If I get some time, I'll throw out another video next week going over the results of that, where we're seeing interest rates move. So it is not a foregone conclusion that we're going to see interest rates continue to slide down. It's really going to weigh heavily on what happens next week.